In the world of investing and business strategies, diversification is often hailed as the golden rule. It's supposed to minimize risk by spreading investments across various sectors or assets. But what if this popular strategy is actually a mistake? In this video, we'll challenge conventional wisdom by exploring the hidden dangers of diversification. Rather than reducing risk, excessive diversification can dilute your potential returns, complicate your decision-making process, and even lead to missed opportunities. When people talk about diversification, they often say it's the key to safety. The idea is simple. By spreading your investments or efforts across different areas, you reduce the chance of losing everything if one part fails. But here's the problem. This isn't always true. In reality, diversifying too much can actually create more risk. The more you spread yourself thin, the harder it becomes to manage everything effectively. You might be less able to identify problems in specific areas or react quickly enough when things go wrong. Instead of lowering your risk, you could be increasing your exposure to potential losses from areas you're not fully invested in or knowledgeable about. So, while diversification feels safe, it can actually be a false sense of security. It's like having your money in 10 different things, but none of them are strong enough to really deliver big returns. Ultimately, too much diversification can leave you exposed in ways you might not even realize. Diversification often leads to something called lost focus. When you're trying to juggle too many investments or projects, it's easy to spread yourself too thin. You can't give your full attention to any one thing because you're constantly switching between different areas. The problem here is simple. When you're divided across too many directions, you end up being mediocre at everything instead of excelling at something. Your time, energy, and resources get diluted, and that makes it harder to make smart decisions or stay ahead of the competition. By focusing on too many things, you lose the ability to truly master any one of them. In business and investing, true success often comes from focusing deeply on what you do best, not trying to be everything to everyone. Diversification pulls you away from that core focus, and in the end, that can hold you back. One of the biggest drawbacks of diversification is suboptimal returns. When you spread your investments across too many areas, your potential for high rewards gets watered down. Instead of going all in on something that could really take off, you're spreading your resources too thin. Let's say you have a chance to invest in a high-growth opportunity, but because you're diversified into other areas, you can't fully commit. So while your other investments might be safe or steady, they aren't growing as fast as that one big opportunity you missed. The reality is, by diversifying too much, you limit your ability to see those huge returns. Sometimes, focusing on a few high-potential areas and going deep is what drives real success, not spreading yourself across everything and settling for mediocre results. Here's where diversification can really backfire: the jack-of-all-trades trap. The idea is simple. When you try to do everything, you end up doing nothing really well. When you're spread across multiple investments or projects, you're not giving any of them the time and focus they need to truly succeed. This approach often leads to mediocrity. Instead of becoming a specialist or an expert in one area, you're just trying to keep up with everything. You might end up bouncing from one thing to the next, never giving any one project the attention it needs to really grow or thrive. Focusing on too many things might make you feel busy, but it doesn't make you successful. In fact, it's the exact opposite. It's the path to getting stuck in the middle, with no real standout wins. Sometimes, narrowing your focus and going deep on one area is the key to success, not trying to be everything at once. By the end of this video, you'll understand why sometimes going deep is more valuable than going wide, and why you might need to rethink the conventional wisdom of diversification. Are you ready to rethink your strategy? Let's dive in.